Okay, and the topic for today is elements of financial system. Very important topic. Okay, so before going to the topics, here these are the two new batches. Okay, starting from March 24th, 80% discount is going on, double validity on Mahapacks. More on this later. Let's move on. Okay, so what are the elements of financial system? Firstly, what is the financial system? Financial system means everyone, as we have, there are certain persons who invest. Okay, means suppose if I am a human, I am a normal investor, right? I'll invest either in shares or in banks or in anywhere, isn't it? And then there are takers, loan takers, right? So the if I invest in shares, then those go in mutual funds. So that is again invested in further the stock markets. If I invest in FDs, those go in banks. That is again taken as a loan. So logic remains the same. Somebody is investing and somebody will be taking the loan. So who all are the ones who invest? Who all are the ones who take the loans? So first, let's see. Lenders. Lenders means surplus economic units, and borrowers means the one who is investing, and borrowers mean the one who is taking the amount. Okay. The non-financial intermediary economic units that undertake lending and borrowing. Non-financial intermediary. Okay, means these are not financial persons, but they are the intermediary economic units. Means basically who? Shops, workshops, then factories. These are all economic units who undertake lending and borrowing. They do take the funds. They may also be called as ultimate lenders and borrowers. Okay, so these are also called as ultimate. Now this depends on what. If I call this as NBFCs, NBFCs also lend as well as borrow. Both the things are done by NBFCs. Similarly, banks also. So they may be called as ultimate lenders and borrowers to differentiate them from the financial intermediaries who do it, right? Lenders try and earn the maximum on their surplus money, and borrowers try and pay the minimum for the money borrowed, right? That is the common logic. Bank will always try to earn maximum interest on loans, right? And always try to give least interest on the deposits, right? Least on deposits. So that is the logic everyone follows, isn't it? So first is lenders and borrowers. Second one, financial intermediaries, which intermediate the lending and borrowing process. Means those who intermediate, means those who form the link. These are basically the links. Okay, so which are the links? They interpose themselves between the ultimate lenders and the borrowers. Means lenders means the one who is investing, like I myself who is investing, or you who is investing in FDs or in mutual funds or shares anywhere. Okay, and the borrowers. And who is between us? Suppose if I want to invest in mutual fund, I'll have to go to mutual fund company. So that becomes the financial intermediary. If I want to invest in bank basically, so bank becomes the financial intermediary. Okay. So between the ultimate lenders and the borrowers, and endeavor to maximize profits from the differential between what they pay to the liabilities and earn on assets. So financial intermediary means basically, example, let's take these examples. Bank. Okay, bank is a financial intermediary. Then you have NBFC, that is again a financial intermediary. Okay, everyone, many of them are there. Anyone who takes money and gives money, that is basically the financial intermediary. In the case of banks, this is called as a bank margin. Okay, we call it NIM, net interest margin, right? NIM, net interest margin. Means what is the NIM? What I take on the loans versus what I give out on the deposits, right? This is a bank. Okay, this is a bank. So this bank does what? First, take the interest on loans, right? Interest is taken on loans over here, and it gives interest on deposits. So deposits, they give the interest. So what the bank will always try to do? The bank will always try to get this higher, and this it will try to get it lower, right? So it should be lower. I'll write it clearly, isn't it? Always it will try to give lower interest rate, and it will try to get higher interest rate from the loans, right? So obviously the endeavor to pay the least on deposits and earn the most on the loans. That is why you must be on your guard when you when they make you an offer for your money and what they want to lend for you. So obviously everyone is doing the same thing, isn't it? Third financial is financial instruments. What are the instruments? Instruments means you can call it anything. See here, it can be bank FD also. Okay, it can be bonds also. Bonds. Okay, treasury bonds. It can be this NSC also, National Savings Certificates. Okay, that is also a part of this financial instrument only. Any document which gives me a guarantee that my money is safe with somebody, that is basically this financial instrument. It can be shares also. What is shares? Shares also the same thing. Only safe means what? I am myself convinced that this company is okay. Nobody is guaranteeing me that it is safe or not. Okay, in shares. Okay. So financial instruments which are created to satisfy the financial requirements of the various participants. So financial instruments are created to satisfy financial requirements. Means if my requirement is investment, then I'll get that FD and give the loans. If my requirement is loans, okay, I'll get the money and give that bond in writing. What do you give in loans? I give that bond in writing. Okay. These instruments may be marketable like treasury bills, or non-marketable like this OD facility or FD also. Same logic. Say this, FD is non-marketable, whereas trade T-bills are marketable, isn't it? Now before going ahead, download Adda 24/7 app on your mobile. In this app you will be getting all the premium study material plus live classes, ebooks, tests, everything you will be getting. Okay. Also subscribe to Officers Adda 24/7 YouTube channel. In this channel you will be getting number 1, the latest updates on JIB and CAIIB. Number 2, free YouTube series. Free. Right now we are running the selection batches. Okay. So free YouTube series you will be getting it on the Officers Adda 24/7. Okay. Which is the fourth element? Creation of money when demanded. Now what is this creation of money? Creation of money is always done by the central bank, RBI. Always remember. Okay. RBI is a main element in the financial system. Okay. As you know, banks collectively have the unique ability to create their deposits equals to money, because we the public generally accept their deposits as a means of payment, right? So RBI is mainly concerned with the creation of money, and under RBI all the banks work for creation of money. How does RBI create the money? Sure, RBI creates the money using CRR, okay, SLR, not SLR actually, CRR is the main part, okay, then repo, okay, that is known as creation of money. How does it create money? Mainly through CRR, okay. How does it do it? Suppose if let's say RBI gives the repo rate of let's say 10%, okay, what will happen? If A deposits some money in bank, okay, A deposits let's say 100 rupees in bank, okay, what will this bank do? This bank has got a deposit of 100 rupees. So CRR is 10%. This bank will keep 10 rupees as CRR, and now what is remaining? 90, right? This 90 rupees this bank will give a loan, right? So this is a loan. So loan means what? This 90 rupees will go to what? Bank gives the loans via credit, means it doesn't give in cash now, isn't it? So this will again go to somebody B. What will that B do with this loan? This B will again deposit it in some bank, this money, right? B. So again bank. What will this bank do? This bank will, out of this 90 rupees, this bank will keep 10% now. So 9 rupees it will keep, 9 rupees, okay, and give 81 rupees as a loan now, 81. So this is again a loan, and the circle continues. It goes on and on. It will go to C now, 81, sorry, 81. It goes on and on. It will go to C, then C's bank, C will deposit it in the bank. So this is known as money creation. Creation of money is an important step or important responsibility of RBI. Okay. Under this, when RBI decides the repo rate, all these banks work under the RBI to create this money collectively. Okay. Fifth is financial markets, the institutional arrangements and conventions that exist for issue and trading of dealing of financial instruments. Means what? Like I was talking of FD, I was talking of stock shares, I was talking of bonds. Okay, these are all financial instruments, but these instruments need to be issued by somebody. Okay, so these are issued by whom? These are issued by those specific institutions. Means FDs are issued by banks, right? Then stocks are issued by the companies. Then bonds are issued by either government or private. So these financial markets should exist so that there is a buying and selling of these elements. Means what? Suppose if this is bond I am purchasing, I have purchased it from, let's say, company A. Company A has given me a bond. Okay. Now I have purchased this bond over here for, let's say, whatever that price might be, 90 rupees, let's say. Okay. I have purchased this for 90 rupees. But I will purchase this bond and sell it when I'll sell this bond when the price goes to 95, right? So what am I doing? There is some buyer in this market who is ready to buy for 95 rupees. So if there is somebody who is ready to buy for 95, buy it for 95 rupees, means what? It means there is a market existing, right? Market exists when there is a buyer and a seller, right? The institutional arrangements and conventions that exist for issue and trading, so buying and selling of these financial instruments. Okay. Sixth is price discovery. Price discovery is an important element of the financial system. Price discovery means what? Let's come to this example again. I bought this bond at 90 and now I am planning to sell it to 95. Okay. Let me take this example over here. So I have brought it at 90 and I am planning to sell it at 95 to somebody, let's say B person. Okay, A has brought it at 90 and A wants to sell it to B at 95. But what happens? B is also not that fool in the market. B knows what is the worth of this bond. A is trying to sell it to 95 at 95, but what will B do? B will try to negotiate it. Negotiate means 95 and 90, it will be somewhere near, let's say, 93 rupees. Example I am giving. So this 93 rupees, both of them agree. Okay. So this 93 rupees is known as price discovery mechanism. The prices of the shares and prices of the debt are discovered, made and determined in the financial markets. Prices have an allocation of funds function. Means basically there should be a price discovery. Both of them, buyer and seller, should agree to it. Only then the market happens or the buy and sell happens. Okay. So now, how does this work actually? See this. Basically remember the interest rates and the quantity of loans. So that is always inversely proportional. If the interest rates go up, the quantity of loans will go down. Isn't it? Will you buy, let's say, let me give you a simple example. If your rate of interest is, let's say, 8% and there are, let's say, 100 buyers of the loan, 100 loan takers, okay, 100 persons who are taking the loan. Now if the rate of interest goes from 8 to 9, okay, what will happen? There would be same 100 buyers or there will be lesser? Obviously there will be lesser, there will be 90 buyers now. If the rate of interest comes down to 7%, this 100 figure will go to 110 or 120, isn't it? So as the rate of interest decreases, there are more buyers to the loan. And reverse is the case with FD. If the rate of interest goes down of the FD, there would be lesser buyers to that FD, isn't it? Now, to sum up all the financial system, this is a picture. See this picture. I'll just expand this. Okay. These are the investors. Think in terms of block letters, okay, or cross level. These are the investors. Household sector, corporate sector, government sector, foreign sector. These are all the ultimate borrowers. Borrowers means what? These are borrowing your bonds, okay. So debt and shares, debt, and these are all foreign sector. These are all debts and related to debts only mainly, okay. So these all give the debt. to the concerned parties. Okay, and ultimate here household sector will do what? It will give the loan to this. Loan means what? It's basically investing. Suppose if I am the household sector, okay, I am an individual person, I will give money to that bank and take a document from them. That's called as FD. Similarly for others also, I'll give the share money to that company and take the document. That's called as shares. So this is a debt given by me to the bank. Okay, so that's why it is called as debt over here. Actually it's an investment, but it is called as debt because after all I'm parting with my money, isn't it? So this money will go to what? This money will go to this whole system. This system means central bank, RBI over here. Then what does central bank do? Central bank gets this money, this balances this money, and it also creates the debt, creates money. As I told you, 10% CRR. Okay, that example. So RBI also creates the money. So it creates the money, and these banks use that money within each other to trade. Okay. Then you have QFIs, DFIs, means NBFCs basically. This will be called as NBFCs. So central bank covers these banks as well as NBFCs. So these also form the part of this financial system. Now what do these do? These guys do deposits. So these guys will deposit it to the lenders. Means what? This word is something confusing, isn't it? Say the central bank will give loans. Not only central bank directly doesn't give any loan. This is a bank. Okay, banks will give loans to these guys, right? So whenever bank gives loan, it is actually doing what? It is lending to this person. So this is again a deposit function of this. Means bank is funding, parting with the funds to these guys. So these again become the takers: household sector, corporate sector, government sector, and foreign sector. Same persons who are there on the left side, same persons are there on the right side. Because after all, here everyone amongst us keeps the money in FD and also takes the loan, right? So these are the instruments. These are the buyers of the loan. These are the givers of the loan, or depositors you can call it. And this system forms the intermediaries, right? Like the one we studied, the intermediary systems. Okay, so this is all about the financial system. Okay, now let me come to the batches. March 24th the batches are starting. 80% discount, double validity on Mahapacks. Use the code Y432. On 80% discount means, see here, I'll show you now how to get this discount. All the 4 subjects ABM, BFM, ABFM and BRBL are covered. Okay. Now how to get this discount? Let's go to Adda 24/7. If you are having the app, I would suggest go on the app. Okay. In the app you are getting 1% extra using the coins. So go to Adda 24/7. Click on JIB and CIB on the front page itself. Click on JIB and CIB. So the JIB, CIB, Mahapack, CIB 23. Click on CIB 23. Now you will see the batches. See this batch. English. Click on this batch. Once you click on the batch, you will get the details. Means what are the dates, what are the timings. See this over here. Everything. Okay. Then recorded videos are available 24/7. So if you miss out on any class, you can definitely get back the recorded videos. 2-way interactive classes. Okay. So you can ask the questions there and then itself. Ebooks are available. Tests are available. So everything is available, isn't it? So now let me show you the fees. 23,999. Click on view offers. Put the code Y432. Y432. Click on apply. Look at this. 23,999 reduces to 4,799. 80% off. Grab this opportunity because these offers don't come every now and then. In fact, I would suggest you should go for Mahapack. Mahapack means what? Mahapack gives you additional advantage. Means 15 plus batches per subject you are getting in Mahapack. Let me show you. See this. Go to JIB, CIB again. Okay. Click on Mahapack. Once you click on Mahapack, click on CIB ka Mahapack. You will see the details of the Mahapack. Okay. 15 plus batches for ABM, BFM, ABFM, BRBL. Means all the 4 subjects. Okay. Full length mock test. Recorded videos of live classes are available. 50 topic wise ebooks are available. Okay. So now let me come to the fees part again. 35,996. Click on the view offers. Put the code Y432. 432. Click on apply. See this, 35,996 reduces to 7,199, 80% off. Grab this opportunity ASAP, because, and also validity. Now it is 6 plus 6, 12 months validity is going on due to the offer. It's not always possible. Okay. So grab this opportunity ASAP. I'll be back with the next session tomorrow. Okay, everyone, watch our 6:30 YT session for JIB and 7:30 YT session for CAIB. Very important topics are covered over there. Okay.